What is going on, investors? Hopefully, you guys had a wonderful week out there. That is right. It is Friday. It's time for the FAANG Stock Recap Show, where every Friday we recap all the major news of the week and the technicals for all the major FAANG stocks, Microsoft, Tesla, NVIDIA thrown into this group. And we do this every Friday. Happy that you are all here. And it was a brutal week for the stock market. Stocks were down, but what it is doing is it's reinforcing exactly what we've preached for a super long time, basically from the beginning of time here on the investor channel, is that we pile into high quality names. And I'm going to show you, before we get into the news, before we get into these, I want to show you the year-to-date performance and where we are off the 52-week highs with all the major FAANG stocks. We'll start it off with Facebook. Year to date, this stock is still up 13%. The 52-week high is $384. We're down just, and I say just, when you look at Teladoc, when you look at Zoom Video, which you look at every stock outside of Tesla that Kathy Wood owns, these stocks are all down 40, 50, 60%. We saw DocuSign down today just 40%, just off the highs. Facebook is down just 20%, basically signaling that that stock is in a correction. Apple is still up 23% year to date. You would take that performance any day of the week for any of your stocks, quite frankly. And off the highs, we're down just 5% on Apple. These stocks are holding up very, very well. Amazon, not a big year for Amazon, just up 5%. You know that when we look at the stock chart of Amazon, it's basically gone sideways for over a year now. We're down just 10% from the highs on Amazon. NVIDIA, hello, if you were equal weight all these stocks, you would be up huge because of NVIDIA. This stock is up 146% just this year, and we're down just 11% from the highs just a few days ago. Now, Google is still up 63% this year. This is the GOOGL ticker. The 52-week high, we're down just 5.8%. That's what, look, I do the FAANG Stock Recap Show every week, not for clicks, not for money. I do it because these are the stocks that we should center our entire portfolio around. And as the markets begin to pull back, we are seeing the reason why. Yes, these stocks are down. Yes, they are all down from the all-time highs, but we're talking a maximum of 20% with Facebook. And we're seeing with Microsoft down just 2%, Google down just 5.8% from the highs. Microsoft, which we just mentioned, up 48% still year to date, and Tesla is up 53% year to date. This one also, like Facebook, has had a pretty big drawdown. I'll talk to you whether or not I bought the dip on this one today, down 18% from the highs. Remember, when I'm saying we're down from basically all-time highs across the board with these stocks, and we're still up on the year. Remember, all your Kathy Wood stocks have been obliterated, literally obliterated. All of the major FAANG stocks are up on the year still. This is how you build wealth. You don't speculate. You don't need to wildly speculate. You don't need to concentrate your whole portfolio on super speculative stocks. You need to center it around quality. Now, speaking of quality, maybe Meta is quality. Start of the week at 337, like all stocks pretty much. I mean, some stocks held up. Apple included, held up actually pretty well this week. We'll talk about that here in a second. But Meta in specifically went down to about $306 per share. Now, speaking of Meta, they're delaying the move to their new ticker symbol, which will be MVRS, until early 2022. They didn't give any reasons for this or any reasons why. I don't know if it's just maybe they want the fiscal year to end and then to do it. I don't really know what the holdup. It could be maybe some trademarks, maybe some other stuff that we don't know, maybe more legal stuff kind of behind the scenes that they want to brush up before they really make that transition. Now, Meta reverses its stance on cryptocurrency ads. So before, they were only allowing a very select number. I think on here it even said that they were only allowing about 3 companies previously to run, basically give them a regulator license to run crypto ads. Now that's up to 27. Now, we could really take a step back and say, is this because Facebook is seeing ad demand dry up to a certain degree? So they're starting to allow, well, I wouldn't say controversial type ads, because I don't necessarily think cryptocurrency is particularly controversial unless you're talking about just kind of those scam coins, so to speak. Well, look, now you got cryptocurrency ads, but what we could say is, hey, maybe Meta is seeing some slowdown in terms of its ad revenue, so they're having to open things up. Google did a similar thing a few years ago where instead of running ads on the sidebar of Google searches, it used to be only 1 or 2 searches on top were paid. Now that's like, half the page is basically a paid ad, and then like 2 or 3 on the bottom. Like there's like 1 organic result like on a search now with Google. I'm kind of joking to a certain degree, but Google used to show way more organic results on their search engine. Now it's a lot, especially with competitive categories. Far more paid searches are the ones showing up there. It could be that Meta is kind of experiencing the same kind of thing, and they're going to just kind of jam more ads, not only jam more ads down your newsfeed, but also allow previously kind of restricted categories and kind of open those up. Now, a UK antitrust regulator is directing Facebook to sell, I'll be honest with you, I don't know how this is pronounced. It's Giphy or Giphy, I don't really know, but it is a company that Facebook acquired for over $300 million, and UK regulators are saying that they need to say it. That's why with these companies, we say it all the time here on the show. They are not going to be able to grow via acquisition, because they'll buy a company and then a year or 2 later, and we're seeing even now, like almost a decade later, when it comes to Instagram and some of the other acquisitions that Facebook made, regulators want to go back on approving that deal originally. Okay. They don't like Instagram and Facebook together, but they approved the deal way back when. Okay. And so it's going to be difficult for these companies to grow. So they're going to have to grow organically. And that's a much longer time frame. Okay. Especially when we're talking about something like the metaverse. Facebook's already put a 5 to 10 year timeline on that. So you're looking at a long time before we start seeing organic growth from that segment of the business. You just want to keep that in mind when you're investing in these companies. Particularly, I would say Facebook is the fact that this company is not going to be able to complete acquisitions. They're going to have to grow organically, and they're already signaling that their pivot to the metaverse is going to take 5 to 10 years. We just want to keep that in mind. Now, moving on to Apple. Great performance this week by Apple. Started the week at about 160, ended the week at about 161. This is why we love stocks that break out. We'll see this with NVIDIA as well, and Google to a certain degree as well, and Microsoft as well. The stocks that broke to all-time highs and broke above it are holding that level. It's just showing you the sellers just simply are not stepping in at those areas. And so Apple's held up very, very nicely. Also, on top of that, with these stocks, we have massive buybacks. I think Apple has a $20 billion buyback. Facebook has like $20 billion. I think that's Facebook's buyback. Apple has like a $90 billion buyback. Microsoft has a buyback. Google has a buyback. When you have those buybacks and then you have these major pullbacks in the market, those buybacks, whether or not the company's in there buying, I don't know. I would assume that they probably are. That just supports the stocks even more. That's why we center our portfolio around these types of stocks, because the speculative stocks, they don't make enough money to have a buyback. And so when you have a negative return on the markets, those stocks get pulled down even more. The volatility is just even greater. That's why we love stocks like Apple. Now, Apple told the State Department employees that iPhones were hacked by this Israeli group, this NSO group. Now, this also impacted Google as well. This impacted at least 9 State Department employees. Certainly not a good look, but there's not a lot of competition out there in the smartphone market, right? You either got an Apple or you've got a Google for the most part. So if they're getting hacked, it's not like you can really move on to another one. I mean, I'm just being honest with you. Apple tells suppliers iPhone demand is slowing. This was a controversial story. I was listening to a lot of analyst takes on this one, and some of them said that this didn't make any sense. Some analysts that I heard, and I don't know, look, these guys might be just tooting and tugging the Apple, the company line, or tooting their horn. So I'll just preface this with that. But what I heard some analysts say is that Apple pre-bought a bunch of stuff anticipating, and by stuff, I mean components for the iPhone. They actually increased the number of units that they were going to bring over here. They took chips that were going to go into an iPad, started putting them into iPhones. They started, remember, Tim Cook's an operations guy, a logistics guy. This is his specialty, okay? He saw this 6 to 12 months ago, I guarantee you, okay? And so he was planning for this already. And so that's what some analysts were saying, was that Apple just pushed forward a bunch of purchases on their components, on their equipment from their suppliers. And now they have the supply and they're selling it into the market. They don't necessarily need more in order to make more phones. In a more normalized environment, they might be doing that. And so that's what I heard from analysts out there. Now, Apple iPhone 13 wait times in the US and China continue to get better. So that would support kind of both sides of the argument. Okay, first of all, if you had to wait for an iPhone 13, it's showing you that there's probably tremendous demand for that device. But if those wait times are starting to compress, that instead of waiting 2 weeks, now you're waiting a week, it's showing you that there is supply there, and the supply is starting to catch up with the demand. Either way, it didn't really impact Apple stock. As we saw this week, the stock held up very nicely. This story just kind of created maybe a little bit of a blip in the radar. Now, Apple is set to unveil a new iPhone SE in early 2022. Although we've seen these reports in the past, it doesn't always materialize, and it would be somewhat odd for Apple to release a new phone in the first quarter, but it could be that they decide to do that. We'll see what happens if Apple does that. Certainly could be bolstering their sales in their Q1. Now, Apple iPad shipments surged 33% in Western Europe, while the rivals of other tablet makers decided to just go down. They didn't decide that. Apple is absolutely dominating this market. They're not only dominating this tablet market, that is because the chips inside Apple's tablets just make these so much better than anything else. And guess what? The laptops and computers are about to follow, okay? A lot of the iPad Pros, in fact, the iPad Pro over at Apple has an M1 chip in it. Well, guess what? All the laptops and computers that Apple makes now has at least an M1 chip, and some of them have this new M1 Max and M1 Pro Max chips. These are so much better than anything else on the market. That's why I'm incredibly bullish about Apple in the near future, and it has nothing to do with the iPhone, okay? The iPhone is a great product, and it certainly has its place. It has its dominant place on Apple's financials, but I'm actually more excited about the computers and the iPads to a certain degree as well, because the chips in those give it such a large competitive advantage over its competitors. It's not even close, okay? And I'm not just an Apple fanboy, so to speak, kind of tooting that horn. You can search YouTube and look at the reviews of the new Apple MacBook Pro computers, which have those new chips in it. Do they have their problems? Are there glitches? Absolutely. Are as good or better than some of these souped up gaming machines, which you need to be liquid cooling and have like 10 million fans cooling them off so they don't blow up? They're outperforming those on battery power with no heat and no fans. It's unbelievable what they're doing. Now, moving on to Amazon, start of the week at 3,547. This one actually slid down kind of nicely. Talk about it if it moved into a buying opportunity. Now, Charlie Munger, who is, I think he's been all in on Alibaba and all out on cryptocurrency. I'll let you know. Look, Charlie Munger, we have tremendous amount of respect for this guy. He's obviously the Berkshire Hathaway, which is Warren Buffett's companies. He's the vice chairman there. This guy is a pretty old guy. And like I said, he's been very bullish on Alibaba. Pull up the Alibaba chart and see how that's worked out. And he's been very bearish on crypto, more specifically Bitcoin. I'll see how those two trades work out. Now, maybe in the longer term, this guy wins, but in the shorter term, this guy looks like he doesn't know what he's talking about. And I say that with all due respect. I'm not trying to criticize this guy. I'm not trying to put him down or disrespect him. I'm just saying, look, this guy has been all in Alibaba and he's been negative on crypto, and that's just been a terrible trade. Now, he does see that Costco's 12% e-commerce sales growth could threaten Amazon, and I guess it could. We just saw Amazon, they grew 16% over the last quarter. This was on their last quarterly earnings. Year over year, they grew at just 16%. I was very disappointed with that. The street was disappointed with that. We saw the stock chart of Amazon take a big dip when it reported that, but I don't think it's because Costco is going to catch up with them with 12% e-commerce growth, okay? That's good e-commerce growth for Costco. Costco's its own stock. It's a stock I actually particularly like, but I don't necessarily think it's going to catch up with Amazon. That is because Amazon has a bigger moat around their business than people realize it. And here's an example of that. Amazon is set to become the largest U.S. delivery service by early 2022, surpassing both FedEx and UPS. And surprisingly enough, Here's the thing about this is that Amazon is not necessarily taking away market share from FedEx. They're not necessarily taking away market share from UPS. Yes, some of the business that Amazon would flow to these companies is now not flowing to them, but UPS and FedEx are already swimming in demand. This is why they have to do surcharges. This is why they have to raise prices in Q4. They raise prices to control demand, to actually tamping down demand, believe it or not. Okay, they have to hire seasonally, like maybe close to 100,000 workers, delivery drivers, assistants, people in their fulfillment centers, because there's so much demand. Okay, Amazon is basically just taking capacity and demand that's already there, and now they are capturing it. So I don't want you to think that FedEx and UPS are all of a sudden going to go away and cease to exist. I actually don't believe that at all. I think those companies will absolutely continue to thrive. What this does for Amazon is it gives it a big moat around its business, because guess what? Every year FedEx and UPS has to raise their prices. Last year they actually put a cap on the number of packages you could send out, and if you went over that, they charged you even more. So they charge you a surcharge, and then if you went even higher, they charge you an even more surcharge. So think about Charlie Munger's belief about Costco. Sure, let's just assume their e-commerce business just continues to grow. I think that's a safe bet. But guess what's also going to grow? Their variable cost with UPS and FedEx, because those companies are just going to continue to jack up the price. Whereas Amazon has control of that. They don't have to pass profit down to FedEx and UPS. They have control of that. And so what is that going to do to Amazon's cost? You guessed it, drive it down. So how do you think Costco is going to compete with a company that controls almost their entire logistics chain and makes it at a cheaper margin than what FedEx and UPS? You guessed it, it's going to give them a big, big competitive advantage, not only on cost, but also delivery time, also end-to-end experience, okay? Because you don't control how FedEx and UPS deliver packages. I think they do a fantastic job, but you don't control that over at Costco. And who knows how they'll be able to do that into the future, whereas Amazon has control of that end to end. Now, moving on to NVIDIA, we talked about how this stock's just been, up 146% year to date. Hello, if you're like me, if you held this one for a long time, your portfolio's loving that performance. Start of the week at 324, like all stocks, most stocks slid off to about 306. This was the disappointing news of the day. The U.S. FTC sues to block NVIDIA's $40 billion acquisition of ARM Holdings. We've talked about this several times here on the show. We did not necessarily anticipate this deal went through. If it went through, we were going to pump and be pumped up and party, because this was going to lock in, just absolutely solidify in concrete, in granite, that NVIDIA was the chip company to beat probably over the next 10 years, maybe even over the next 20 years. This is not necessarily going to derail that, because keep in mind, NVIDIA just licenses, everybody just licenses ARM's technology. This is Apple, this is TSMC, this is AMD, this is Intel. They all license through ARM. This is what is holding this deal up, because what they think might potentially happen is NVIDIA acquires ARM, and then all of a sudden they stick out their arm and say, no thank you Intel, no thank you Apple, no thank you AMD. We're not going to let you use ARM technology, which is absolutely fantastic and is driving a lot of the next generation chips, and certainly driving all the cell phone chips that we definitely see now. And so that's what regulators are worried about. I theorized here on the show that I thought this could stretch into next year after UK made their decision. The FTC decided to just jump out in front of this one and sue to block this deal. Now, what people are saying in terms of analysts and over at Citi, they cut the odds of this deal going through from 30% down to 5%. So they're like handicapping this. And I gotta, I gotta agree with what Citi's saying. This is a long shot to go through. This is what is now happening, though. This deal now with ARM Holdings is no longer priced into the stock. That's what I would have to say. Now, not all retailer investors might agree with me. Maybe even not all institutional investors would agree with me. But I would guess now that the ARM deal just simply is not priced into the NVIDIA stock. That's why, if this 5% does come to fruition, because keep in mind, we are dealing with regulators, with government, okay? What does the government want? They want money. So if NVIDIA can play play that game and get regulators to approve this deal. Maybe NVIDIA makes some concessions. Maybe it does some things, but I wouldn't necessarily bank on this deal going through. I, in fact, would not count on it at all. I think it's safe to say that this deal not happening is priced into the stock. So eventually, if we do get confirmation from NVIDIA saying, hey, we tried, we're going to pay the breakup fee with SoftBank and say bye to ARM Holdings, I don't think NVIDIA stock would negatively react on that day or that week very much. Now, if for some reason this deal reverses and all of a sudden we throw a Hail Mary passes and it completes, well, I think this stock could go up because then investors would be super excited about that. Now, moving on to Google, started the week at 2,900, ended just, marginally down, okay? Down to about 2,860 or so as I'm looking at after hours trading with Alphabet. Now, they have unprecedented cloud tailwinds. This is according to UBS, and they hiked the price target to $39.25, which is about over $1,000 more. Now, here's what we know about Google Cloud. If you follow the channel, we do the earnings reviews. We know that Google Cloud, while it has impressive growth rates, 40-50%, somewhere in that range, well, it's not profitable yet, but it looks like up in this next year, as long as you maintain similar growth rates, it looks like Google Cloud could potentially go profitable next year. That could be the unprecedented tailwind that analysts are starting to predict. The fact that that business is going to continue to grow, but now we're going to actually generate operating profits from that for Google. I'm super excited about that. Now, moving on to Microsoft, started the week at 336, ended the week at 323. Zoom video stock dropped 3% in a day, but when you look at that stock, oh my gosh, this stock has just absolutely taken a dump. Just over the last 5 days, darn thing's down like 20%. I mean, look, this is why we concentrate on the winners, why we concentrate on gold medal winners, because what happens to gold medal winners? They win a gold medal in one software, and then they see Zoom video over here winning a little bit on another area of software, and they're like, wait a second, we're pretty good too. We're going to go compete in their race too. And guess what? The silver medal or bronze medal all of a sudden gets destroyed because Microsoft unveiled a cheap standalone version of Teams. It looks like it's going to cost $4 per user per month. Zoom is closer to $15 or $20 per user. So you bet you, what is Zoom going to have to do? Drop their prices. What's that going to do to the stock price? Absolutely tank it. But we're seeing a front running of this already. Okay, so you see the market already reacting to this now because they know Zoom hasn't lowered their prices yet, but guess what they're going to have to do next year? They're going to have to lower them. And when you look at that company's financials, they look good now. They make a profit. They make an operating profit and a net profit over at Zoom. But what investors are anticipating are those profits are going to start to compress, and Microsoft can literally just give away Teams and they don't care, because they've got all these other businesses, the Xbox, let alone Microsoft Office, let alone the Surface tablets and all this other stuff that they do, the cloud computing, Azure. Microsoft just makes so much money, they can literally just sprinkle out a free version of something and all of a sudden destroy or very much take off a ton of market cap off of another one. This is why I don't like speculative stocks. This is why I don't like non-gold medal winning like behemoths, okay? Not because I don't like clicks here on Google. If I did all the speculative stocks, I'd probably have twice as many subscribers. I'd probably have twice as much money in my bank account if I covered speculative stocks all the time on this channel. But we don't, because this is the investor channel. This is, I want you to be the best investor in the world channel, not I want my pockets and my views to be the highest. I don't care about that. I want to make money. Money doesn't care about views. Money doesn't care about speculative stocks. They care about stocks that are already dominating. Money is attracted to those types of stocks. Now, the Sony PlayStation is aiming at the Xbox Game Pass with a new subscription service. I thought this was a little weird. And I'm not talking about the story. I have a PlayStation. I don't play it very much. My boys are getting to the age where they're starting to play games. And on the Sony, you have a PlayStation Now subscription, and then you have a PlayStation Plus subscription. And I always was confused about that. Whereas the Xbox just simply has an Xbox Game Pass. It looks like PlayStation is making the wise move, combining those two. I don't think this is going to hurt Xbox Game Pass. I don't think this is going to hurt Microsoft at all. If you like Xbox, you're probably already in their ecosystem. If you like PlayStation, you're probably in their ecosystem. Moving on to Tesla, start of the week at $1,125. We talked about all week, actually for the last several weeks, when Tesla was going to pull back. It was going to get down to the $1,000 mark. It hit it intraday today, and I'm proud to say I took my own advice and I stepped in and bought this one. We'll look at it from a technical perspective here in a minute. We'll see if I'm anticipating even further drawdown on this one, but I not only stepped in here and bought this for my retirement account, but I threw a couple of bucks in my son's accounts at it as well. In fact, I emptied out my son's accounts today. I actually deposited more. I don't always do this as a father. I regularly put money into their accounts, but today I put even more so they could take advantage of these, what I think are pretty good prices on some elite companies. I stepped in, basically bought all of FAANG in their portfolio. But in terms of my retirement portfolio, I've probably made less than 10 purchases all year. Tesla today was one of them, and it is significant. You're only allowed $6,000 in deposits at my age, $6,000 of deposits into an IRA account. So for me to buy $1,000 stock, and I don't do fractional shares in my IRA account, it's just E-Trade doesn't offer them, at least right now. So I bought a full share. So a sixth of my deposits went into Tesla. I probably don't need to describe why, but we'll talk about some reasons why here in a minute. Now, Elon Musk did sell another $1 billion worth of Tesla stock. He is now over $10 billion worth of sales. That is because he has a large tax bill of $11 billion. I know with most of you watching this channel, you understand that when you see Elon Musk is worth $200 billion or whatever much his total net worth is, I really don't know what it is. That doesn't mean he has that much money in the bank. In fact, it probably means he is super smart and he has almost $0 in the bank. Okay. That is actually how you get that rich, is by not putting your money in the bank, by not having any cash. You literally took everything you had, then you borrowed some from investors. You probably borrowed from a bank and threw it all into a business. You were all in. Okay. It's well documented how all in Elon Musk is. So it's not surprising when he has such a large, we're talking about a massive tax bill, that he has to sell this company. I think it did create a buying opportunity in the shorter term. Now, Tesla confirms that it's Austin is now its headquarters. That has some advantages, I think, from an operation perspective. I did pick up my Tesla, I think it was 2 weeks ago at the Fremont plant. That thing was huge. There was so many people there, but they're probably out of room. They're probably got that at full capacity. Not probably. They have that at capacity, okay? They probably have some room to expand a little bit, but for the most part, the growth with Tesla is actually coming in Texas. It's coming in Austin. And so I think it makes a lot of sense to make that a little bit closer to where the headquarters are so they can expand those offerings as well. Because think about it, they make all Tesla cars either in China or out here in California. So if you live on the East Coast, how far that car has to travel, okay? And so now they're going to be able to make them in Texas. So if you want one east of the Mississippi, well, it's going to cost a lot less for Tesla to travel those cars in that direction. Now, Tesla plans to save on costs typically associated with a late quarter delivery push. This comes from an Elon Musk email. This was an interesting email. So what Tesla was focused on in the past was to just jam, like as a quarter was ending, they would just try to jam as many deliveries as they possibly can, basically to make the financials and the press releases good. So they had to hire a bunch of temporary work. They had to do a lot of things like kind of inefficiently in order to get that done. You might have suffered a little bit on build quality in terms of Teslas. Now Elon Musk is saying, hey, let's not do that. Let's not push it as hard as we possibly can. Let's get things right. Let's keep cost in check. I think this is a drive toward profitability. We saw how profitable Tesla was in the last quarter. Wait till the next quarter. Wait till the next quarter. They've driven the prices up on virtually all their cars. All their cars have a wait list of at least 3 to 4 months. I'm seeing upwards of a year on some of these cars. They are driving the cost up, and they are going to be driving costs down as much as they possibly can on the operating side. I think we're going to have margins expand. I think they had vehicle margins near 30%. That's like Apple-like margins on a car. And if Tesla can drive those even higher, which I think they actually forecasted to doing, profits are going to absolutely reign over at Tesla. Now, moving on to the technical session of the show. This is very important because most of these stocks are pulling back into areas where we like them. We talked about how Facebook could potentially pull back to the $300 range, and I leave these lines in here. And I'm getting less and less comments on my channel that technical analysis is voodoo. Why do you waste time on the show? I am showing you right here this line that we had marked out at $300 per share. We tend to use round numbers here. We don't always go right to where the technical, like right where the candles end. I tend to go in more round numbers. Number one, it's easier to listen to, easier to remember those numbers, but psychologically as well, there is some of that. Study enough economics and you realize there is a psychology to price, and $300 is a nice round number on Facebook. We saw intraday today, the stock went all the way down and touched 300. I mean, this is what we talked about, and I've talked about this for weeks. I mean, I'm patting myself on the back a little bit here. I'm preaching to the choir because many of you that watch this show are a subscriber, support the show, and I appreciate your support. But the reason why you support the show is we are accurate. We are as accurate as I possibly can on this show. We talked about how we had this breakup. We went to ties to 383, and I contended as this stock started to pull back. What did I say? We were going to give back this entire leg, and at least intraday today, we did. We pulled down south right at about $300 per share. I jumped in not right at 300, not in my IRA account. I want to stress when I talk about buying, I did buy in my son's account down at this $300 level. That's not necessarily a level where I think we are absolutely stopping. I will tell you what, and this goes for all of these stocks. If Facebook opens up the week next week and the broader market continues to sell off and Facebook pulls back, yeah, we're pulling back into this area of consolidation zone. This stock could come all the way back down. The next spot we're looking at, quite frankly, on the low end is about $260 per share. So I don't want you to think that just because I say, hey, this is a buying opportunity, just because I say, hey, I did step in my son's account and bought this, do I mean this is the bottom? I don't know. I don't think this could be the bottom. In fact, we have no evidence that it is. We're seeing no sign of a reversal. This stock just makes low after low after low. I'm just saying for the longer term in my son's portfolio, which is 20, 30-year time horizons, maybe for them, 50, 60, maybe they have these stocks for a very long time, all the way until they become old men. Well then, yeah, are we trying to pinch pennies between 300 and 260? No, it doesn't really matter. Now for my retirement account, where I'm only allowed 6,000 in deposits, where I'm a little bit older and a little bit closer to retirement than my kids, yeah, I am being a little bit more careful. I'm waiting for a sign of a reversal here. Reversal patterns will take out the previous lows. Right now, we're looking for a break. Probably, I'm actually going to drop this down. We're looking for a break above probably about 310 to 315 to signal that this was likely a bottom over at Facebook. Now, moving on to Apple. This thing is broken out. It's in an uptrend. It's still in an uptrend. There is absolutely nothing to be worried about right now with Apple. And that's why I'm not worried about the broader market yet. That's why I haven't posted one of those videos. You've seen them from the other people on YouTube. And when I say this, I'm not criticizing these people. These people put out incredibly entertaining videos. I watch them. I enjoy them. I think they're great. They have 3 times, 10 times more subscribers than I do, and people love their videos. I'm not telling you not to watch these other people, but a lot of people have already put out, I've sold all my stocks. The stock market's crashing. I'm all out. All this. No, I am not all out. I am not concerned because look at Apple. Apple's the largest company along with Microsoft and the rest of the companies that we're looking at, but particularly Apple, basically the largest company. Where's it at? It's basically at all-time highs. It's fractions away from all-time highs. If Apple pulls back next week, then yeah, I'm worried. The market's going to go way lower. We are going to have a quote-unquote crash. Now, if you only invest in Cathie Wood stocks, you've already crashed. And if Apple pulls back, it's going to get 10 times worse. Believe me, those stocks are going to go down even more. Okay. But if Apple can hold these levels, I'm not concerned at all. Okay. The S&P 500 should rebound. The NASDAQ should be fine. This is no big deal. In fact, we would need to get below pretty healthily under about 157. I would probably even say 155 or so on this stock. That's a good $6 from where it is. I would not be concerned about Apple until we got below that. We get a below that, it would signal that this could be a temporary topping formation, and we could come back and retest areas that we have marked out here at about 150 and lower at about 145 per share on Apple. But right now, I am not concerned at all with the broader markets. If you've piled into speculative stocks, you should have been concerned a long time ago. When rates started going up and stimulus checks stopped going out, you should have gotten very concerned, okay? But with this stock, not concerned at all. What is this also telling me? The demand for the iPhones, demands for the computers, demand across the board has to be off the charts because the smart money is basically piling into the stock and the smart money is not selling the stock. They continue to hold it at these levels because they know next quarter is probably going to be pretty freaking good. Now, Amazon hasn't done anything that we haven't seen already. This stock has retested this high level up here at about $3,760 per share, and it's gotten rejected multiple times, okay? But this stock is still somewhat in an uptrend. I'm actually on a weekly chart right here. We'll just keep it on a weekly chart. Doesn't really matter. I had some other charts that I was looking at. We usually look at this from a daily view, but this stock basically in sideways consolidation. On a weekly time frame, though, we are still basically in an uptrend. As long as we don't break below about where we're at, the stock should hold. But even if we do, the stock pulls back to 3,300, not really concerned. Pull back to 3,100, not concerned. In fact, I'll step in here and buy even more shares of this one. On the bull case side, we're looking again for a break above probably about 3,800 on Amazon. If the markets hold up, Apple holds up, Microsoft holds up. Those are the two stocks we're really watching for the broader market, because if those stocks start pulling back 10, 15%, well, the whole rest of the market, yes, we are going to have a quote unquote crash, not necessarily to .com or 08, 09, but yes, we're going to have a significant pullback if those stocks break support and break the levels where they're at. Amazon, not really in that case. We could come back down all the way back down to 2,900 on this one. That would be a buying opportunity in my opinion. Now, moving on to NVIDIA, still looking pretty good. I'm going to change this from a weekly view to a daily view here. So if you can just hang with me for a second while we switch the view on this chart. This chart's still looking great to me. I mean, look at this thing. I mean, it's hard to get this all on the screen too. I mean, this thing is still parabolic. We're consolidating now between about 290 on this one up to about 323. We're basically in the middle of that at about 306 on this one. I wouldn't be concerned with this one unless we get below, probably well below about 280. Get below 280 on this one, it would show me temporarily this was probably a topping pattern. We have no candles. I mean, we literally have almost no candles between 230 and about 270 on this one. So if you break below this, I would expect this stock to come down hard. So NVIDIA's up 146% year to date. It's off just slightly from the highs. The highs are up at about 345. We're at 306 on this one. That's not a big pullback. You could get a big pullback in NVIDIA anywhere south of I'll even say anywhere south of 250. I think would be a strong buying opportunity for NVIDIA. Now, moving on to Google, not doing anything in particular that we're very concerned about here. Yes, it's gone sideways. Yes, our uptrend is absolutely completely broken, but the stock is going sideways between our range right now, 2,700 up to about, we'll even call it about 3,000 on this one. As long as it stays in this range, you saw with Amazon, while it's not really, it's not helping your portfolio performance. It's not like Zoom Video. It's not like Teladoc. It's not like Palantir. It's not like Plug Power. It's not like all these stocks. You're constantly pumped by everybody. And we're talking not just here on YouTube, but CNBC and across the board. People are pumping these speculative stocks down your throat. It has no, I mean, this is nothing compared to that. So it's okay for mega cap stocks to go sideways. It helps them grow into their valuation. It helps them continue growing their business, building that moat around their business, and eventually we get a breakout. We saw it with NVIDIA this year. We've seen it with Apple. We've seen it with Facebook. We've seen it with Microsoft. We've seen it with Google really for the last year. It's natural for Google to take a breath, and that's exactly what's happening. Moving on to Microsoft. Now, this one has pulled below an area of consolidation that we did have marked out last week at about 330. We were consolidating between 330 and 340. We put a big red candle down below there, and take a look at this on Microsoft. Okay, there's not a lot of candles here. So I actually would anticipate Microsoft continuing to potentially walk back, okay? And we could get back to this area down here south of about $310 per share. That's where I would get very, very excited about buying Microsoft. Would I step in there and buy? I would take the totality of the situation intact. How are we doing with the virus news? How are we doing with interest rates? How are we doing with the economy? How are we doing with these types of things? Because when a stock like this makes that big of a move, as we've seen with the speculative stocks that I've described to you, they tend to overreact. I'd love to see an overreaction with FAANG, where we come down here. It would make sense for it to stop here at 310. An overreaction would take us back down to maybe the previous areas of lows of consolidation. That would get us all back to 284 on this one. I would be super excited if we get that opportunity. I don't necessarily think that's the case. Now, I want to broadly stretch out here. We are still in a mega uptrend with Microsoft. So it took me to format my chart. My apologies for that. But we look at the channel that we're in. We're still in this mega upward channel with Microsoft. Take a look at this. And this started all the way back in January of 2021. So basically this year, this stock is still in this mega uptrend. So just the fact that we've pulled back to about 323, I'm not concerned. And in the shorter term, even if we get back down here to about $300 per share, this uptrend is still intact, right? Because you have lows, higher lows, and let's say we bottom out somewhere in here. It's just another series of higher lows. And then this stock would just continue to go up. You would have to break below this lower trend line. And where you draw this trend line in is up to you. You could draw it a little higher. I think we're probably pretty close with it right here. And that means in the shorter term, we're talking about over the next 3 to 4 weeks, this thing would have to get below $300 for it to signal a trend reversal. So if we come back down here to 3, that's why I've called this a very nice buying opportunity. Finally, we're talking about Tesla, and this one hit. Take a look at this. We don't, in fact, I just typed in this. I did not pre-prepare this chart. We've had this line on this chart. In fact, I'm going to make it a little bit longer so you can see it here. We've had this line on this chart for weeks now, ever since we've kind of busted the highs. We had a retrace to this $1,000 level, went back up to 12, and then came all the way. We talked about how we were probably going to come back down here and retest 1,000. And that was the first area. That was the very first area where I thought I would want to step in on this one. Now I did, but I stepped in lightly. And here's what I want to emphasize. Okay, I'm already overweight Amazon. I'm already overweight Apple. I'm already overweight Facebook as well to a certain degree. NVIDIA also. The two stocks that I don't own enough of in my portfolio, and I'm just talking about my portfolio, is Tesla and Microsoft. I need, and I don't necessarily need it, but I want more exposure to both Tesla and Microsoft. So we just went over the Microsoft chart. I'm waiting for a bigger pullback in Microsoft. I'm going to go pretty big if we see that pullback. Same thing with Tesla. Now, if you're in the opposite situation, you don't own any Amazon, you don't own any Apple, you don't own NVIDIA, I wouldn't necessarily say this is your strongest opportunity to buy Tesla. But if you're like me and you only had a very small amount of Tesla, this was your first option. Now, the reason why I say it's not necessarily the best spot is if we break this $1,000 level, we only have a half of a candle here. I would bet that we come down here to $900 per share. Now, I want to stretch this chart out a little bit, and I want to show you that we are not at all concerned at Tesla right now, okay? We're still not concerned because we are still in a major uptrend that started back in May of this year. The stock was $565 and it's just chugged along. Now we might have had a little bit of a euphoria breakout on this one and it's starting to pull back. no big deal. If this stock pulls back, and we're talking in the shorter term, in the next 3 to 4 weeks, so sometime over the course of December and a little bit of January, if it pulls back to this $900 level, it's simply coming back to this uptrend line. No big deal. I will add another share of Tesla at about this $900 level if we retest it. We also have that as the previous areas of highs. We also have a gap that will have been filled. There's just a ton of, now we will have not made a reversal there. Okay. Could it reverse itself in one day? Sure, it could. I wouldn't necessarily anticipate that, but all the technicals would point to that is where we are likely to reverse. We filled a gap. We touched all-time highs. We retraced an area over and above highs. We were coming back down onto a longer trend line. I'm sure if I put moving averages on here as well, it would likely line up with there. You'd have a lot of technicals line up here. I wouldn't necessarily think this would be an area where the short sellers would absolutely be loving things. Sure, if you break 900, there are some levels below that, $800 more specifically, but that would, in my opinion, just be another area where you can add. Again, we're not trying to pick the absolute bottom on these stocks. And why is that? Because these stocks have held up very nicely, okay? When we're talking about speculative stocks, Zoom Video, Teladoc, Palantir, Snowflake, all these stocks that go up and down very, very hard, yes, you need to be very precise where you're buying them. When we're talking about mega cap gold medal winning stocks, Tesla has an absolute firm grip on the EV market right now. There is no debating that, and I don't think any company is going to come close to them in a matter of years, okay? Maybe over half a decade later, Rivian, Lucid, a number of other companies, maybe even Apple can compete with them, but for right now, into the upcoming years, there is no comparison. That company is going to gobble up tons of market share, tons of profits over the next couple of years. I like their chances. The rest of these stocks is a foregone conclusion as well. That was the FAANG Stock Recap Show for today. Hopefully you guys had a great day out there. We'll be back again soon with more. Good luck with your investments.